Hot diddly dog, looks like we are back like NIO's L90 on pre-order night. Buckle up because we've got some serious acceleration happening. And no, I'm not just talking about the cars. NIO stock just punched it into high gear, hitting a brand new 21-month high as investors jump back on the EV rocket ship. Let's break it all down. So US-listed shares of NIO surged over 7% early Tuesday, extending a rebound that kicked off back in July. The stock soared to $7.78 in the first hour of trading, mirroring the performance in Hong Kong, where shares closed up 3% at $57.40. This marks NIO's highest level since the final days of 2023, a serious comeback for a stock that was left for dead just a few months ago. Now, what's fueling this surge? A mix of record-breaking sales, major investor optimism, and a juicy tease from a key NIO executive. On Tuesday, NIO's vice president, Chin-Li Hong, casually dropped a bombshell saying that last week NIO's 3 brands received over 10,000 orders, and even hinted that it seems a little bit lacking. Just a little? That's the kind of humble flex we like to see, but the numbers speak louder. Between September 22nd and 28th, NIO sold a whopping 10,800 vehicles, up 61% from the previous week's 6,700 units. That's not just growth, that's warp speed, and it's not an isolated event. NIO stock has been on a tear, more than doubling since April when it bottomed out at just $3.02. Wall Street's waking up and fast. Driving this turnaround is the skyrocketing demand for NIO's newest 3-row SUV, the Onvo L90, and a record-setting August delivery count. And while the stock took a small dip earlier this month after the company announced a $1.16 billion equity offering, it didn't take long for investors to brush that off. In fact, analysts viewed the move positively, as it strengthens NIO's balance sheet and sets them up for continued investment in battery swap tech and future models. According to Goldman Sachs, the fresh capital injection is expected to reduce NIO's debt ratio from 98% to 92% and help fund around 11 billion yuan, or about $1.4 billion, in research and development each year through 2026. That's some serious long-term vision. The rally that started in July really gained traction when NIO unveiled the second Onvo model with a lower-than-expected price, and then shocked everyone again by cutting the price even further. That pricing strategy worked. In fact, the company sold out its entire 40,000-unit ES8 production capacity in just 9 minutes. Yep, single digits. Orders placed just last week now face a 24 to 26 week wait time. That's a 6-month backlog. To handle this surge, NIO announced it will be using 100 kilowatt-hour battery packs to speed up deliveries for the 3rd gen ES8, though that might temporarily limit battery swap availability at its stations. Still, that's a trade-off most buyers seem more than willing to make. And it doesn't stop there. NIO's aiming to deliver 150,000 vehicles in Q4 across its brands. That's a bold target, but if recent momentum holds, it might not be far-fetched. Based on weekly registration data, NIO has already sold 29,910 vehicles in China between September 1st and 28th. What's the takeaway here? NIO isn't just rebounding, it's redefining the race. With surging orders, ambitious production, major analyst backing, and the goal of finally reaching profitability, the company is setting the stage for what could be its most pivotal quarter yet. That's it for now. If you made it this far, smash that like button like a NIO hitting ludicrous mode, and drop a comment if you're riding the wave or just watching from the pit lane. Until next time, stay charged.